Okay, so Tesla is exploding today, trying to reverse the bear market, breaking its main short-term resistance levels. Yes, it looks bullish, however, we must stay alert as it is approaching a key resistance level that could ruin the bullish thesis in the blink of an eye. I will update the most important key points we should watch from here in this video. Welcome to the Finance Hydra channel. My name is Nathan. Let's analyze Tesla's price action, starting with the hourly chart. In the short term, Tesla broke our resistance level at 123, which was the main resistance level we were working with since, well, last week, and we broke this key point. And this is extremely important. This is very good because by doing so, Tesla is avoiding a very, very problematic bearish pattern that has been doing in the past 6 weeks, I believe. So, I'm so sorry, 6 months. So yes, it is very important to see Tesla doing this because right now we are breaking the last resistance level over here. Now, the 123 is supposed to work as a support level for us in the future along with the 21 EMA. So we see a dual support level that could hold Tesla's price if it drops in the short term, reinforcing a bullish thesis on it. Only if Tesla loses the 123 along with the 21 EMA, I believe Tesla could frustrate the bullish thesis at least in the midterm. Now, speaking of midterm, the pattern I was describing to you guys earlier is this one over here. Let me draw to you guys. It was quite normal to see Tesla going up, finding a top level, dropping, doing a lower low, lower than the previous low over here, bouncing again to the same resistance level, and then it drops. Here does the same thing. It bounces, does a lower low, bounces again to the resistance level, and then it crashes. Here we see the same pattern again, and right now Tesla avoided this extremely annoying bearish structure because it is doing a bullish pivot point in the daily chart. Now, the problem is Tesla is just retesting its 21 EMA. So far, since September 2022, Tesla has been doing nothing but lower highs, lower lows, trading below the 21 EMA. The EMA has been working as a resistance level for Tesla, so we are in a very delicate, critical key point, and if Tesla does any top sign over here, any bearish structure, it could easily ruin the bullish sentiment seen in the 1 hour chart in the short term, and just resume the bearish sentiment in the midterm in the daily chart. And to add more layers to our thesis, let's take a look at Tesla's max pain, which is around 133. Right now Tesla is at 130. If we take a look at the open interest on Tesla, we broke the 123 along with the 125. Now we are at 130. By breaking the 130, the next spike on open interest on the calls, of course, is at 140 over here, which, coincidence or not, is at the same price level where the 38.2% Fibonacci's retracement is right now at this moment. If we take a look at the weekly chart, this sounds a little bit better, a little bit easier to understand, right? If we pick this top level from this bottom level and uses a retracement, well, the 38.2 is at 140. So everything here seems to be speaking the same language to me. Now, by breaking the 21 EMA over here, I think Tesla could easily bounce to the 38.2% Fibonacci's retracement, going up more than $10 from here. Now, of course, to me, Tesla has been a buy since it broke the 214 down here. As I warned in our daily market dive newsletter, now that is up more than 10%, there is no problem revealing this information. Do you want to join the top traders and be among the top 5%? Check my website. The link is in the description of this video. Now, back to Tesla's chart over here. yes, we are just under a resistance at 130. We have more upside left, but it is important. It is important to reinforce that the 140, it is not only an optimal price level options-wise, but chart-wise as well, because first, it is where the 38.2% Fibonacci retracement is right now at this moment. Second, 2 weeks ago, last week, Tesla triggered a hammer candlestick pattern just after retesting our support level at 110 over here. Now, the technical target for this hammer candlestick pattern is, well, around 140, because we did an upwards breakout, and if you project the hammer's height in the direction of the breakout, you'll see the 140 again. So the 140 seems to me at least a quite important and meaningful technical key point to work with right now on Tesla. Are you still watching this video and you are not my subscriber yet? There is literally 50% chances you are not my subscriber. What the hell are you doing? Subscribe this channel to keep in touch with my daily analysis. You probably like it, the content. Otherwise, you wouldn't be watching me so far, am I right? So subscribe, click on the like button to support me. Now in the monthly chart, Tesla looks quite impressive because we have been doing nothing but drop since November 2021. We crashed 75% right now, so it feels like Tesla could be oversold long-term speaking. We retest the 110 support level, and right now Tesla is trying to do another hammer candlestick pattern just like it did in the weekly chart. If Tesla if Tesla confirms a hammer candlestick pattern in the monthly chart, because we are on January 17 right now, so there is plenty of time for Tesla to frustrate this hammer. But right now, if Tesla actually confirms a hammer and triggers this hammer next week, we could see a bounce to even higher levels. So Tesla looks quite promising. The most important key support level right now, short-term speaking to me, is the 123 along with the EMA in the hourly chart, the 21 EMA. Only if Tesla loses this dual support level, in my humble opinion, as a retail trader, just like you, just like everybody over here, I do believe Tesla is going to frustrate the bullish sentiment. Let's keep our eyes open at these key points. I hope you guys like it, the content. Thank you very much for your audience, my dear friends. See you guys tomorrow. Stay safe.